Silver prices have exploded in 2025, surging past $65 per ounce, up more than 120% year-to-date. This isn't hype, it's a perfect storm. Investment demand is surging, industrial use is breaking records, from AI data centers and solar panels to electric vehicles, while supply remains structurally tight. And here's the real issue: most global silver isn't actually available. A massive share of reserves sits locked inside ETFs and strategic stockpiles, metal that simply does not trade. Liquidity is thin, dangerously thin. In this fragile environment, a shocking rumor began spreading across financial markets: a 4,000-ton emergency silver lease. Silver hit fresh highs in late 2025, smashing through $60, then $65 per ounce. Analysts point to Fed rate cut expectations, global tensions, and growing safe haven flows pouring into silver. At the same time, industrial demand keeps climbing. According to the Silver Institute, even when total demand briefly softened in 2024, industrial consumption hit record levels, driven by EVs, solar power, data centers, and electronics. Supply couldn't keep up. As of last fall, nearly 24,000 metric tons of silver sat in London vaults, but roughly 80% of it was pledged to ETFs, effectively untouchable. Then came October, when India and China rushed into the market. Borrowing rates in London spiked. Over 1,000 tons of silver had to be rushed in from the US and China just to ease delivery pressure. Liquidity collapsed. Prices became explosive. In late October 2025, a sensational claim surfaced. The allegation: JP Morgan Chase secretly leased 4,000 metric tons of physical silver from ICBC, China's largest bank, under a 3-month emergency agreement. The purpose? To meet a massive delivery obligation, metal that had to be returned by early January. If true, this would be the largest silver lease in history. To put that in perspective, 4,000 tons equals 128 million ounces, an amount capable of shaking global markets. The story suggests that once this silver was leased, it became unavailable to everyone else, tightening supply even further. The source of this claim: niche metals analysts, not mainstream financial media. Goldbroker.com reported that a 1,000-ton Indian order triggered chaos, forcing major banks to scramble for metal. Other traders pointed out that the rumor lined up with unusual options activity in silver markets. But here's the key point: no official confirmation exists. No Reuters report, no Bloomberg coverage, no statement from the London Bullion Market Association, no regulator confirmation. JP Morgan's disclosures show no record of a transaction this size. Even analysts sympathetic to the theory admit there is no publicly verifiable evidence this lease actually happened. So right now, the 4,000-ton lease remains unproven. Not fact, but not impossible either. And if it did happen, it wouldn't imply wrongdoing. Bullion banks routinely lease metal. It would, however, signal extreme stress in the global silver market. Rumor or not, US investors are paying attention because silver is now strategic. The COMEX holds one of the world's largest silver inventories. As of October 2025, warehouses reported about 16,500 metric tons. A 4,000-ton draw would equal nearly 25% of total COMEX stocks. But reality is worse. Roughly 80 to 85% of COMEX silver is already locked in ETFs or long-term holdings. True availability is far smaller. That's why even rumors of shortages can send prices vertical. In September 2025, the US government took notice. The USGS recommended adding silver to America's critical minerals list, warning that supply disruptions, especially from Mexico, could cause serious economic damage. Silver shortages don't just hit investors. They hit defense systems, clean energy, electronics, and inflation. The US is one of the world's largest industrial silver consumers. From 5G networks to solar panels to EV batteries, silver's unmatched conductivity makes it irreplaceable. In 2024 alone, global industrial demand reached 680 million ounces, a new record. If physical supplies suddenly vanished, US manufacturers would pay any price necessary to secure metal, and investors would feel it instantly. Silver ETFs like SLV would face violent flows. Prices would surge. Inflation pressures would rise, all while Fed rate cut expectations in 2026 continue pulling capital into precious metals. The 4,000-ton emergency lease story is dramatic, but unverified. What is verified is this: silver is in a historic bull market. Supply is tight. Demand is accelerating. Inventories are vulnerable. But in a market this fragile, even whispers can move prices. Silver isn't just a metal anymore. It's a pressure point in the global financial system. And volatility is far from over. Subscribe for more data-driven market insights.